What started as an energy shock is spiraling into the global food system. Fuel prices usually correct following diplomatic developments around Iran, but fertilizer markets continue to remain under stress. The big question, are we heading toward the next food inflation cycle? Take a look at this report for more.
Fuel prices have been volatile, reacting swiftly to the Iran ceasefire. Prices dropped over 15% after spiking nearly 50% during the conflict. But fertilizer markets are telling a very different story. Prices remain elevated, up more than 85%, signaling deeper supply disruptions that a ceasefire alone cannot fix. The reason lies in the supply chain. Fertilizers are heavily dependent on natural gas, and nearly 20% of the global LNG flows through the Strait of Hormuz. The region also accounts for a significant share of ammonia, urea, and sulfur exports. So if energy prices may stabilize, eventually, if flows return, fertilizer costs could remain sticky. Analysts have been flagging looming price rise across supply chains ever since the conflict began.
It's probably the most significant crisis since the Arab oil embargo in the 70s. And every day it continues. It's actually beginning to look even more dramatic. So unless this kind of stops somehow miraculously in the next few days, we're going to see a very big jump in prices in every single material around the world, from energy to food, because actually farmers depend on fertilizers, and there's a lot of fertilizers that are being produced in the region. There's a lot of scarcity which is coming our way.
This divergence is now forcing farmers into difficult, time-sensitive decisions. With input costs surging, many are weighing whether to cut fertilizer use, switch to less intensive crops, or delay planting altogether. Early estimates suggest crop yields could fall between 10 and 15%, especially in Asia, where the rice planting season is about to begin. At the same time, disruptions in LNG supply are already impacting fertilizer production in countries like India and Indonesia, which rely on West Asia for almost 30% of its needs. The result is a cascading effect from higher input costs to lower output, raising the risk of tighter food supplies in the coming months. The impact is now spreading beyond farms to global food security. The UN's World Food Program warns that food insecurity in Asia-Pacific could rise by 24%, with countries like Myanmar facing acute stress. Globally, food prices are expected to increase, with early estimates pointing to a 3.6% rise at the retail level by June. There are also broader risks. Major producers may restrict exports to protect domestic supply, amplifying shortages for import-dependent nations. Despite ongoing negotiations, industries are bracing for a long-term supply stress. Business Bureau Report, WION World is One.